Welcome to October 2025, where the world of crypto is more electrifying than ever before. Whether you're a seasoned investor, a curious newcomer, or just someone who's heard the buzz, you're in the right place. Let's dive into the heart of the action and see what's really happening in the crypto universe this month. Bitcoin is everywhere, on the news, in conversations at coffee shops, and lighting up social media feeds. Everyone's got an opinion, and the stakes are higher than ever. It feels like every day brings a new headline, a new debate, and a new reason to pay attention. The market feels like a wild roller coaster. One moment, prices are soaring and excitement is in the air. The next, there's a sudden drop and panic sets in. Some people are all in for the thrill, chasing the next big win, while others are warning that a crash could be just around the corner. But this isn't just for techies or financial wizards anymore. Regular people's savings, hopes, and dreams are on the line. Families are talking about crypto at the dinner table, and everyday folks are wondering if they should jump in or stay far away. Decisions made in government halls and corporate boardrooms now have a direct impact on your wallet. New regulations, company announcements, and global events can change the game overnight, making it more important than ever to stay informed. Our goal: to break down what's happening, explain why prices are swinging so wildly, and show you what it all means for your money. No jargon, just the essentials you need to know to make sense of it all. By the end of this journey, you'll have a clear, simple picture of the 2025 in 2025 crypto a macro said. What's driving the chaos, and what you should keep an eye on as the year unfolds. So buckle up, let's figure this out together, and get ready for the ride of a lifetime in the world of crypto. Let's talk numbers. Bitcoin's at $124,000, smashing records but swinging wildly, one day up, the next down. Ethereum's at 4,587. Climbing but hitting resistance at $4,750. The market's nervous after a $1.7 billion wipeout in September, the biggest in a year. That crash ended the easy bull run and left everyone cautious. The mood? Neutral. The crypto fear and greed index sits at 59. Neither panic nor euphoria. Everyone's waiting. Will the next move be another surge or a sudden drop? The market's tense, and every headline could tip the balance. For now, it's a standoff. Uncertainty rules. Stay alert. The next big swing could come any day. Wall Street isn't just watching from the sidelines anymore. They're charging in, taking the reins, and reshaping the financial landscape. The world's most powerful financial players are no longer content to observe the crypto revolution from afar. Now, they're making bold moves, signaling that digital assets are here to stay. Take Morgan Stanley, for example. The banking giant now recommends that clients allocate up to 4% of their portfolios to digital assets. That's a major shift from just a few years ago, when crypto was considered too risky for mainstream investors. Now, it's a key part of the conversation in boardrooms and client meetings. Meanwhile, E-Trade is preparing to open the floodgates, giving millions of everyday investors the ability to buy Bitcoin, Ether, and Solana directly from their accounts. This move could bring digital assets to a whole new audience, making crypto investing as simple as buying a stock. Spot. Bitcoin ETFs have already attracted over $60 billion in investments, making it easier than ever for people to add crypto to their portfolios. Now, buying Bitcoin can be as straightforward as picking up shares of Apple or Google. Industry titans like BlackRock and Fidelity are leading the charge, breaking down the barriers that once separated traditional finance from the world of crypto. Their involvement is a clear sign that digital assets are becoming part of the financial mainstream. Even Coinbase, one of the largest crypto exchanges, is seeking federal oversight and forging partnerships with established banks like JP Chase. These collaborations are designed to bring more legitimacy and security to the crypto space. All these moves are about one thing: trust. Wall Street wants to make crypto not just accessible, but safe and reliable for institutional investors and everyday people alike. The goal is to build confidence and encourage even more participation. As billions of dollars flow into digital assets, the bridge between traditional banking and the world of crypto is growing stronger and more secure. The lines between old and new finance are blurring, creating a new era of opportunity. the institutional era of crypto has officially arrived, and the future of finance is being rewritten right before our eyes. Why are some calling for a massive boom? The excitement around Bitcoin and other cryptocurrencies is palpable. Investors both big and small are eyeing the potential for significant gains. Money is pouring into Bitcoin ETFs, nearly $1 billion in a single day. This influx of capital is a strong indicator of growing confidence in the market. Wall Street's green light is bringing in a wave of new investors. Institutional investors are now more willing to dip their toes into the crypto waters, adding legitimacy to the market. The Fed just cut rates, and more cuts could be coming. Cheap money often fuels risky assets like crypto. Lower interest rates make borrowing cheaper, encouraging more investment into high-risk, high-reward assets. The M2 money supply is growing again, adding more liquidity to the system. This increased liquidity often finds its way into various investment vehicles, including cryptocurrencies. Scarcity matters. Only 21 million Bitcoin will ever exist, and more cash chasing them could drive prices up. The limited supply of Bitcoin makes it a unique asset, often compared to digital gold. FOMO is real. People don't want to miss out, and optimism is building after September's scare. Fear of missing out can drive people to invest quickly, pushing prices even higher. If this momentum holds, we could see prices reach new heights. The combination of market factors and investor sentiment could create the perfect storm for a significant price surge. The boom case is all about money, psychology, and timing. Understanding these elements can help investors navigate the volatile world of cryptocurrencies and potentially capitalize on the next big wave. But there's a strong case for a crash too. After September's $1.7 billion liquidation, the rebound was weak, signs of market exhaustion. Recent gains are driven by speculative trading, not steady institutional buying. If big players pull back, prices could quickly drop to $118,000, $120,000 or lower. The US government shutdown adds uncertainty, delaying key economic data. Rising jobless claims could signal recession, bad news for risky assets like crypto. The Fed is divided, more rate cuts aren't guaranteed, and a sudden policy shift could trigger a sell-off. Optimism is fragile, one wrong move could send the market tumbling. The crash case is about weak demand, economic risk, and policy uncertainty. What should you watch next? The Fed's October 8th meeting minutes and Jerome Powell's speech on the 9th. Any hint of caution or disagreement could shake the market. Weekly jobless claims are the best real-time economic signal. If they spike, recession fears rise. Keep an eye on spot Bitcoin ETF inflows. Steady buying means confidence, a slowdown means trouble. These are the signals that will decide if crypto booms or busts. The market's fate hangs on a few key events and numbers. Stay tuned. Every update could be a game changer. The next move is coming soon. So, what's the takeaway for you? Crypto is now a major part of the financial system. Fed decisions and job data move the market. If you're investing, respect the volatility. Big gains and big losses are both possible. The days of easy money are gone. Now, it's about understanding the forces at play. Don't let FOMO drive your decisions. Be smart, be cautious. Even if you're just watching, this is a historic moment as crypto and traditional finance merge. The future depends on the Fed, the job market, and institutional appetite. Stay informed, stay curious, and stay safe in the wild world of crypto. The roller coaster isn't stopping anytime.
Dear viewers, I want to take a moment to thank each and every one of you for watching my videos and supporting my channel. Your love and encouragement mean so much to me. However, I have noticed that many of you enjoy the content but haven't subscribed yet. If you truly enjoy my videos and want to see more exciting content in future, I kindly request you to subscribe to my channel, and subscribing is completely free, but it helps me grow, create even better videos, and stay motivated to share some more amazing content with you. So if you haven't already, please hit that subscribe button and join our YouTube family today. Your support means the world to me, and together we can make this community even bigger and stronger. Thank you so much for watching, supporting, and being a part of this journey. Dear viewers, I want to take a moment to thank each and every one of you for watching my videos and supporting my channel. Your love and encouragement mean so much to me. However, I have noticed that many of you enjoy the content but haven't subscribed yet. If you truly enjoy my videos and want to see more exciting content in future, I kindly request you to subscribe to my channel, and subscribing is completely free, but it helps me grow, create even better videos, and stay motivated to share some more amazing content with you. So if you haven't already, please hit that subscribe button and join our YouTube family today. Your support means the world to me, and together we can make this community even bigger and stronger. Thank you so much for watching, supporting, and being a part of this journey.